Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar raised gains and closed in the New York session on Wednesday with a Japanese bearish engulfing candlestick. This has given some concerns the fact that the market may have hit and reversed from the top side level of 67 cents and therefore now looks to the confirmation to support this negative Japanese candlestick at 66.30. A break there would give further weakness to the pattern, but I would like to see a close under 65.80, which would dampen the sentiment and potentially lead to a more pronounced bearish scenario. However, with the two key levels, that is, as I mentioned, at 66.30 and 65.80, keep an eye on these technicals because they are still supporting a possible bounce and therefore look towards 67 cents, but do need to clear this level of 67.40.45 to support the bullish case onto 68 cents. The dollar index, which measures the greenback strength against a basket of six major currencies, weakened on Tuesday from 104.60 to 104.10 in response to a softer than expected labour market data following a weak US ISM manufacturing report on Monday. Tuesday's data revealed that the US job openings in April fell to their lowest level over 3 years, raising labour market tightness and supporting expectations for the Fed to cut rates maybe sooner than September. All eyes look to the ADP non-farm employment change this Wednesday, and then the main event on Friday being the US non-farm payrolls report, which should provide the latest update on the job growth, with the forecast predicting an additional 185 jobs added, higher than the previous 175,000 jobs. Unemployment is expected to remain unchanged at 3.9%. This data will offer insight into the US economy health, potentially prompting the Fed to cut rates and ease market pressure. But let's see how the numbers all unveil, as I mentioned, starting with the ADP non-farm payroll employment change coming out later today. Turning to the technicals, the support seen minor at 108.65 and the key level where the uptrend holds at 107.60.80. As the US dollar continues to weaken, I do anticipate the market to move beyond 109 and head on towards the region of 110. But do be on your guard, as profit taking may start emerging above 109, as this trend has gone for some time and therefore looking to the level around 106. So we are getting a little bit to the overextended side. The dollar yen came under significant pressure overnight after taking out the level of 155.80 and now holds the next target to the lower side of the range of 153. A break here could see a deeper fall and still awaits the broader call at 150 to 151. British pound also took some profit even though the dollar was weaker. Nevertheless, the technicals are bullish and therefore still hold the view up to 128.5. That could extend on towards 129 and with the weekly broader view of 130 to 131. Any additional weakness should find support, but as mentioned before, is a little bit deep. This comes in around the lows of 127. Spot gold also stays a significant downturn and erased Monday's gains and now puts a slightly negative bias to the actual technical pattern. If we do see a break of 2,321, a key level, and holding there for the 5 consecutive challenges, would see an opening back to the broader key level, which is seen around 2,250.80 on the wider side. Wrapping up with oil, well, the market still weighs on this head and shoulders measured move, which is somewhere around the region of 72.80.90. Although the technicals are low, I feel the market may start displaying some bargain hunters and therefore look for a bounce back to $74 and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look out the interest report. I hope you enjoy the great start to the day.